Welcome to a sponsored webinar by Accountancy Insurance hosted by CPA Australia, Tax Audit Insurance Claim Trends Affecting Accountants. My name is Melissa and I will be hosting this webinar and available for any troubleshooting questions you might have with your WebEx setup. We have people joining us from all over the country for today's webinar. I would like to take a moment to acknowledge the traditional owners from around Australia and pay my respects to elders past, present and emerging. I extend this acknowledgement to all Aboriginal and Torres Strait Islander people who might be joining us today. I would now like to introduce you to today's chair, Eleanor, who will facilitate this session. Eleanor, I'll just open your mic now. Can you hear me?
Hello, Melissa, I can hear you.
Perfect, over to you.
Thank you, Melissa, and welcome everybody. I'm the Tax Policy Advisor here at CPA Australia, and it's my pleasure today to welcome our presenters Rod Spicer and Roman Kaczynski. Rod is a qualified chartered accountant with more than 30 years' experience in the accounting profession. He has held various roles within Australia and abroad, including senior management and associate director positions at an international accounting network. Rod has worked at Accounting Insurance since 2013 and is the Associate Director of Claims and Underwriting. In this role, Rod is responsible for the operations of the Claims Department, policy wording development and the management of large and complex claims. Roman, a qualified CPA, started his public practice career in 1984, working in small and mid-sized practices before starting Halifax Business Consulting in 1998. It was during his time at Halifax that he was introduced to Accountancy Insurance, initially as their external accountant in 2004 during the early stages of operation, and later as a user and advisor on their tax audit insurance product, Audit Shield. Roman's understanding of tax audit insurance and Audit Shield saw him assist and train claim staff at Vero, and in 2006 he was appointed by Vero to review and recommend all claims over $2,000. Roman has a combined strength of accounting practice experience and claims expertise. He has provided input into the ongoing development of Accountancy Insurance's tax audit insurance product, Audit Shield. So today we will be taking questions through our Q&A box. Please direct your questions to all panellists. We will address questions throughout and at the conclusion of this session, and we'll do our best with the time remaining. We'll also have a couple of polling questions throughout the presentation, and it would be great if you could respond. For any troubleshooting queries, please send a message to the host using the chat box. It's now time for our session to commence, so I will hand over to Roman.
Okay, thanks very much, Eleanor. So welcome to the Tax Audit Insurance Claims Trends Affecting Accountants in Australia, coming live to you from the COVID capital of Australia. So actually we do have exemptions, so we can get rid of these masks whilst we're broadcasting. And we are social distancing, so that gives us the basis to run this session. So I'm guessing that most of you in public practice should know who Accountancy Insurance is, and possibly who Rod and I are, and what gives us the basis to deliver this webinar. But for those that don't, Accountancy Insurance runs a tax audit insurance program with accountants in public practice. Through thousands of accountants we work with, we have exposure to close to 200,000 client groups, which represents somewhere around 600, 800,000 tax returns that are sort of covered in the broad net of what we do. The accountants we work with range from nearly all the Tier 2 brands and also the national network groups that exist, all the way through to lots of sole practitioners running accounting businesses. With that mix of accountants and the mix of their clients, we believe we have a genuine cross-section of the taxpayer population, and more importantly for this session, a cross-section of what the ATO and other government revenue agencies are up to inside the representation which we have. So you've heard the introductions of myself and Rod, both public practitioners. Individually, we have those experiences as mentioned in public practice. Rod's in his second tier space and mine in smaller practice areas. Sound is not working. Okay. So I'm not sure why the sound is not working. Let me just try something here.
Hi, Roman. It's Melissa here. I can hear. I'm just going to reply to this attendee. I think their sound settings are incorrect.
Okay, not everyone. Okay, thank you for that. So, okay, so go up to the slides. Okay, back down. Sorry. Okay, so we've a great relationship with CPA Australia and are their official the national tax affiliate. We thank them for the opportunity to present this information to the membership. Okay, today's session, we're going to run through a couple of things. So what we're going to look at is the most frequent claims, claim types by the ATO and other revenue authorities, and based on our data, which, as we're saying, is quite broad. We're going to look at who's being targeted for the audits, and then a little bit of a predictive thing. We're going to look at the JobKeeper. It was a big ticket item in public practice. JobKeeper, how we continue to attract audit activity, and just some of the COVID-19 audits and reviews we've seen so far. But before we start, we want to run through we'll run through a couple of polls throughout the webinar. Firstly, try and make this a little bit interactive, but also to get a sense of whether we've bored you guys to tears and they're fallen asleep. So the first poll is going to be, what do you estimate is the most frequent ATO audit activity type as noted by us, our claims team, from the 19-20 financial year? So the selections there, we've got in sort of BAS audits and reviews, or income tax audits and reviews. C is the employer obligations audits and reviews, and D is going to be payroll tax investigations. So, so what do you think is the most frequent out of that list there? Okay. So whilst you're filling that in, let's go through. Oh, there's the answers. Have a look at that. It's amazing. Okay, let's get started and bring Rod into the conversation. So Rod, we annually put together this summary of what we see as a frequent audit types. So what's this year looking like?
Yeah, thanks, Roman. Look, this year, as everyone who would be attending this webinar would know, would have to be the most unique, unusual and bizarre year that we've ever seen in our lives, because effectively 3 months of it were normal was replaced by abnormal, and partway through the new normal, which down here in Victoria, we haven't seen the new normal yet. We're still in the abnormal. So it's pretty fair to say that there are a massive amount of changes within the government revenue authorities in those last 3 months of the financial year. If we saw the state revenue officers basically reversed payroll tax for the current, or for the 30 June 20 financial year, and it's fair to say that a lot of audit activity was just put slightly on hold, delayed, while COVID sort of settled down a bit, but didn't say stop, it just was slightly slowed down a little bit. But still, the overall factor throughout the 12-month period came through showing us that employer obligation audits were our largest category of audit activity in that financial year. GST BAS audits and reviews second, payroll tax investigations third, and a broad category of income tax audits and reviews, which encompasses quite a few things, came in number 4. A lot of the audit activity these days is being generated by data matching between the various state and federal government revenue authorities. The ATO sharing data with the state revenue officers and the work cover authorities and other various revenue agencies and authorities in Australia. So a lot of mismatching is detected through data matching, through hundreds of millions of pieces of data being shared across government authorities these days, and that drives the audit landscape in Australia today. And it's pretty, and the government authorities are out there saying that. They're not hiding behind that. They're saying, you know, because most government agencies have less staff than they had 5 years ago, but they have more audit activity because a lot of it's data matching, data driven.
Okay, so if we look at the, so that's the sort of top ones. If we look at overall, this is the population of 100% of what we see coming through our books. So this is a percentage of everything that comes through. What percentage are these broad categories? So run us through a little bit of this one.
Yeah, so what we've done over the years here at Accountancy Insurance Audit Shield is that when every claim gets logged or lodged by the accountants that are our clients, on behalf of their clients, who are the ones under audit, they select a claim category based on a range that we have put together over the years, and we try to keep it so the statistics that come out mean something by not having every single type of audit category for every single type of income or expense that there might ever be. So we broadly categorise things like employer obligations to cover pay-as-you-go withholding, superannuation guarantee and fringe benefits tax, for example. Payroll tax is all states. There'd be another 8 pies if we split it out between states. So we categorise them all together. The same with work cover. GST, BAS, we started with sort of pre-assessment before the returns processed or the refunds issued through to post-assessment where the ATO might come back, 6 months, a year later and do a GST audit or review of a taxpayer. So we combine all types of GST audits into BAS, pre and post-assessment. Land tax, all states. Stamp duty, all states combined. And the various income tax areas, like we have some CGT, data matching, superannuation fund reviews, but we also combine full general combined audits and reviews into the one category. What we have seen, if we quickly flick to last year and this year, we can flick back to see, on a quick optic of that chart, there's not much difference when you flick back now to 2020. It looks the same pretty much. So what we have seen, other than sort of 1 and 2% movements and less in some categories, is the top 3 or 4 types of audit activities have remained stable and consistent for the last 2 financial years, led by employer obligation audits, followed by GST, payroll tax, and then income tax. So they have been the top 4 claim categories over the last 2 years. If I look back, if we had a slide of a year before, GST and BAS was the number 1 area in claims in the 30 June 2018 year. Employer obligations was on the march then, if you like, and has taken over the lead and been the biggest for the last 2 financial years.
An observation, Rob, that I've made in some of these numbers is if we look at just that BAS pre and post assessment, looking in and breaking that down a little bit, it looked like this year's figures, 37% of this year's BAS audits in that category were pre-assessment reviews. So I had to look back to last year to see whether that's similar or not, and surprisingly last year's was only around 16%. So there seems to be, the stats sort of suggest there's been a reasonably bigger focus on the pre-assessment BAS reviews over the last year, even though the numbers stay a little bit the same. There seems to be a different mix inside there where they're probably watching out for those bigger refunds sort of early on in the process. And that could be, again, another reflection of them getting smarter and better with their data and their triggers in the systems.
Yeah, could be. We're also at the whim or the mercy, if you like, of the clients that get audited, not the that have Audit Shield through their accountants, not the clients that don't have it. So that the stats can ebb and flow a bit across the years based on a number of factors. But you're right, Roman. It's hard to predict. Were there more large GST refunds in 2020 across the whole of Australia versus in 2019? Well, it seems to show that in our stats, and our stats given the number of accountants that we have on our books, we're fairly confident to say that our trends are pretty accurate based on the width and breadth of our coverage.
And just on one of those smaller categories in there, you got income tax rental properties. So that's a smaller ticket item, if you like, in there because it's specific. It's quite specific The inside there, they've grown a bit in that last year from 2020 to the previous year, 2019. So they've gone up from 3.5% roughly to 5.7. So again, it's another slight move. And the point that I'd probably like to make inside you as well, if you look at the superannuation fund reviews, you sort of look at it and you go, well, that seems to be a lot by number. But the thing you got to remember with super fund reviews, super funds are quite specifically just looking at one entity type and one category of taxpayer in there. So on the whole grand scheme of the pool of what we're looking at, they are going to be low just because they're quite specific in there. Certainly, there's been a lot of activity in that space on its own, but when you put it into a pool as big as this, it sort of it doesn't show up as a significant area on its own.
If I could just comment on the rental property statistics, I think anyone who's in public practice listening to this webinar, or anyone who owns a rental property who might be listening to this webinar, the ATO has been on about a clamp down on rental properties for the last 2 or 3 years, and that's what we've seen come through, because the ATO has every statistic and information from the likes of Airbnb, Stays, and all the rental property providers, real estate agents. They tap into that data. So it's basically impossible now to have a rental property on Airbnb and not declare the income and get away with it effectively. So, you know, we see that coming through when the accountant, the answer, when the accountant, we might be talking to it at a session, and I'll go, well, we don't know what properties our clients own. If they don't tell us about it, but so we didn't even know this person was on Airbnb with the backyard shed that they converted into a bedroom and started putting it on Airbnb. Or the holiday home that's available for rent or not available for rent, etc., etc. So it'll be interesting this year in Victoria, where a lot of people have relocated to their holiday houses due to COVID, because it's perceived to be a safer environment, maybe outside the lockdown zones or whatever, that what they do then with the private usage compared to other years, again, could be a key focus area for the ATO. But it's something that's been broadly broadcast, the same as work-related expenses for individuals. The ATO have been very prominent in saying these are going to be key focus areas for us, and the stats back it up.
And on that point, and it's a well-publicised number, but it's an enormous number. 600 million, I think it was 2 years ago. I don't know what it is nowadays. 600 million transactions are fed into the tax office's behemoth of a data matching network. So that's I'm not allowed to swear on this webinar, but that's a shit ton of data that's been collected in there. So they're getting information from everywhere and trying to piece it together. Now, how accurate are they in putting the pieces of the jigsaw puzzle together? Well, we've seen lots of examples where they haven't been that accurate, but it's highlighted people for reviews because of aspects that they thought suggested something and they didn't suggest something. So there's a lot of information that's being fed in there. And they're going to get better and better with their interpretation of that information. Okay, so now let's. We've done last year, done this year. So the next thing that I think we should do is let's just have a bigger look at our top four in more detail. So, and we'll start with the employer obligation audits.
Yeah. So as we said a couple of times already, employer obligations have been the accountants' largest audit claim type for the last 2 financial years. What causes that? Well, there's been some big ticket changes in the employer obligation landscape in the last 2 financial years. And single touch payroll is the biggest one. But what we're seeing is it's an area where accountants don't get involved. We'll spend a bit more time on this later, but accountants don't get involved traditionally in the payroll preparation for all their clients. It's either too risky, there's not enough money in it, or the accountants have their own in-house bookkeepers or in-house accountants who can handle that. So it's not a traditional bread and butter area where accountants get involved with. So if the employer is making mistakes, errors, things are going wrong along the way, quite often the accountant's the last one to find out about it. And it's not until audit activity starts that the accountants might get involved. So they're not there checking, hey, did you correctly calculate 9.5% of the ordinary times earnings and wages of all your employees? What about the ones that did overtime? What about the ones that are on these sort of allowances, all these other things? But traditionally, they don't get involved in that sort of stuff. So that's one reason. Much timelier data collection by the ATO using single touch payroll. And before single touch payroll came in, the biggest driver of audit activity in the employer obligation landscape was disgruntled employees dobbing in their employers. People don't like not getting the correct pay or not being paid their super. And unless they're scared and won't do it, there's plenty out there that will just dob in their employer anonymously to the tax office. Hey, my employer hasn't paid my super for the last 3 quarters. I want my money. And the ATO will start their employer obligation investigation without mentioning that employee's name to anyone. But so that was the driver. The ATO don't need that anymore. They don't need dobbing in. It probably still occurs, but they don't need it because single touch payroll, even though there are some employers still not on it, your closely held family entities and the micro businesses received an extension into this financial year to get on single touch payroll, but the majority of businesses are on it, so the ATO is capturing the data, and that's driving the new wave of audit focus as a result of that.
There's also the aspect behind employer obligation is the social aspect. There's a tax aspect of it. There's a superannuation aspect of it. But there's also the concept of people aren't getting paid what they should be paid. And that's getting, call it wage theft, call it whatever. And there's lots of things driving that. So it's not, a lot of it's not intentional, and some of it is, unfortunately, but a lot of it isn't, and it's system-based where bigger firms are relying on codings and transfers of data to calculate things, and those links aren't correct. And we've seen some huge high-profile businesses are putting their hand up to say that they've got their wages wrong for a lot of the staff, and that profiling and the social damage that's causing on the back of employees feeling like they're not getting full entitlements is where and why this is always going to be a high priority for a period of time to come on the back of everything that Rod said, and certainly this last bit that.
Well, if you had asked me 5 or 6 years ago, what did the Fair Work Ombudsman do? I probably would have to Google it and look it up. But now they are very, very, very prominent in the audit landscape in Australia. And the term Roman just mentioned, wage theft, has only been created in the last 12 to 18 months, but is a very prominent term out there now. The other interesting little sidelight is we've got PAYG, SG and FBT. I still get amazed at how much we talked about data matching before. That FBT over all the years, the amount of effort and time and tax collected, I'm amazed that it still exists, and there's forever calls to get rid of it, etc. But it's still here, and the amount of FBT audits that are driven by motor vehicle registrations, because the ATO taps into the state road traffic authority's database and just plucks out the company registered vehicles. The amount of FBT audits that we see where that's the driver for the ATO detecting company registered vehicles where there's no FBT activity is, to me, plainly amazing. And what are the answers half the time? The accountant, we didn't know the employer put that car in a company name so they could try to claim back some GST and other things. They didn't tell us. We found it. We don't even have the vehicle in the depreciation schedule. We put it to the loan account, but it's registered in the company. So again, employers, the accountants don't know everything. They're only as good as the information that they got available to them. either from their own resources or what the client tells them. So that, again, tends to be motor vehicle benefits is the main FBT area that gets audited.
Moving on to the next big ticket item, we've got VAS audit and reviews, and as you've already said, the concept of prior to 30 June 2018 was the last time that the VAS audits were number one on the list, and they were overwhelmingly number one and were for a number of years and haven't been knocked off. But they still remain a high ticket item in the audit claims.
They do, and the reasons that occurs are a focus on large refunds. Like, I've never been able to get my finger on what's the trigger that the ATO uses as a large refund before they start reviewing it, but I think it's pretty safe to say that any property purchase transaction of a commercial property on a first-time VAS lodgement attracts the attention of the ATO. You set up a new trust or a company to purchase a property, commercial property, you're looking for that first-time GST refund. It's large, and the ATO pretty much review or audit a fair majority of those. Property sale data, acquisition margin scheme, data mismatching between sales on the GST return and then the sales that get disclosed in the income tax return. That's a very easy mismatch for the ATO to pick up on. And these tend to be the drivers and the main focus areas that we see a lot of the ATO GST audit activity on. The property sector has been large GST audit activity for many years now. And that's because there's so many different variations compared to other industries. You've got your margin scheme, change in credible acquisition, going concern provisions, things like that all come into play in the property industry, and that is why there's a large focus by the ATO.
Okay, moving on to number 3 on our top 4 list, we've got payroll tax investigations. So now, as you mentioned in when you're going through the graph right there, we do incorporate all the states into this one category, just to sort of see how they go. Yeah, so just talk us through a little bit of this.
Yeah, so there is audit activity in every state and territory in Australia. So let's not think, oh, we're in the state. I'm going to pick Tassie. There's no COVID cases down there. But also, it doesn't mean there's no payroll tax audits that get done in Tassie, because there are. So each state has its own profile on payroll tax investigations. But if you would ask me, well, who do I think are the biggest? If I look back on the raw figures, I think I'd say Victoria, New South Wales, Queensland, and WA.
I'll get that right.
That would be what Raymond's got them.
Yeah, I've got them here for you, Rod. So here's something I prepared earlier. So we've got this year the top hits New South Wales the highest by a reasonable amount. Victoria coming in second, Western Australia third, Queensland fourth, and then South Australia, Northern Territory, Tas, and ACT sort of were coming in at the lower levels out of there. Interesting thing out of that for me, or that ranking, if you like, for me, is actually Victoria. If we go back to 2019, Victoria was actually third on that list. So they've jumped up to the second spot. So they've increased their level of activity and knocked Western Australia off as being the second most highly audited payroll tax. And these numbers are. You think that by population, that should be adjusted. So these are just the raw numbers of how many we see. So the population is a factor in there. So you would expect New South Wales and Victoria to be up there, but certainly Western Australia in 2019 were, and for 2020, Western Australia has dropped down to being third. So so Queensland's been fourth in both those years over there. So that's just the breakdown inside those states.
Yeah, thanks. Well, I think some of those states, certainly Queensland, tend to go with a bit of a warning and alert system, a self-review system versus full audit straight up. So they get a number of people voluntarily disclosing doing the work for them up front, instead of someone like Victoria goes straight to an official investigation from the outset. And the reasons that we see for a lot of the audit activity are, well, data sharing again. We can't go on enough about data sharing, but your ATA, your WorkSafe in Victoria, your iCare in New South Wales, with the State Revenue Office, Revenue New South Wales, etc., are all sharing that magical wage and contractor figure and superannuation figures across the various jurisdictions. And if there's a mismatch in the data, you can bet your bottom dollar one of them's going to pick up on it. And whoever seems to miss out first, if it's payroll tax, they'll have first crack at any audit activity. Other things we see a focus on grouping contractors and employees based in other states where the employer entity hasn't registered in the other state. Example, they set up a branch office in another state. They might be registered in New South Wales, but they haven't registered in Victoria where they're supposed to, and things like that. And through data matching, and STP will be an easy pick here as we go through it, where there's a presumption, and it's normally accurate, that the employer's gone over the threshold and are required to be registered for payroll tax in the various states. They've all got different thresholds. But if you're over and they haven't registered, then it's an automatic trigger and a please explain or investigation comes forthwith as a result of that. So they're the main drivers that we see as the reasons driving payroll tax audits in all the states and territories.
The other one that's inside, that's not a top on the list, but it's relevant when we look at the states running things, is work cover. So we cover work cover audits, arguably not a tax. It's but we when it comes to the certification side of it, so we treat that certification process as being like a return, and then we've been audited as to the level of wages that you've paid and whether that's accurate or not. So we cover that as an audit type. Now, it grew slightly from 19 to 20. Still not a high ticket item like payroll tax, but we put them together. But as Rod said, that there's lots of information that they can get through those annual wage certifications that they're handing over. So from walk down the corridor and just present that information through to their partners in state taxes. Okay, so we're down to our fourth on our top four list here, and that's it's the broad category of income tax audits and reviews, and what we commonly call full, general, and combined. So this is things that we put into this category are where they're big audits, or where they're combined audits, where they've got income tax and GST at the same time they're looking at them, or they're broadly general audits. So they're not looking at something specific when they first come in. They might find something specific at the end, but when they come in for the audits, they come in generally. We don't know what we're looking for yet, but we think there's something here, and we're going to have a look. So that's sort of that's sort of how we come up with this category in itself. So
I mean, we've looked at what sort of things would fit into that, and we've seen for a number of years now, the ATO has a high focus area on the high wealth sector, families, individuals, businesses that are all linked to high wealth individuals, and they tend to come in and do, as Roman just says, a full broad-based audit of the whole client group, from individuals through to all their super funds and entities and everything. So it is a full audit, and they're not looking for anything specific up front. But their first sweep of the financial statements, once they've got their hands on those financial statements and they're trawling down the P&L and seeing, look, entertainment, debit loan accounts, things like that, the key triggers that they're looking for to then move into your FBT, your income tax, your Div 7A areas is what we put into this landscape. And as well as things like pre-lodgement and pre-engagement reviews are a new area that have come up in recent years, where the ATO's got data and information on some larger scale transactions and they want to know more about it up front call it fireside chats with the taxpayer, coffee and donut time before you lodge your returns. We've seen a bit of a shift in that in recent years. But it is a bit of a catch-all type category. With the amount of claims coming in, we do our best to categorise them as accurately as we can, but if the accountant picks that as the category, we'll probably tend to leave it more than move them around. We think it could be rental property, it's sort of, unless it's obvious, we leave it. So it is a bit of a catch-all, but again, it shows the width and breadth of the Australian tax system that this category makes it into the top four, when we've got those other specific ones as well that have got their own profiles that we saw before.
So you've touched on this next slide earlier on in the piece, and you and I both talk to practitioners a lot, and where they're at conferences and seminars and their potential prospects, if you like, for us. And so a lot of them, and we talk to them about, and we hear from them saying things like, well, because we do an accurate job on what we do, we don't think we're going to be targeted or audited, or everything we do, we sort of try to keep all our clients underneath the radar so they'll never get picked up for audits. And the suggestion with all of those comments is that it's their work that is helping reduce their clients' exposure to being picked up for an audit. But interesting, and you highlighted it before, but just run us through this highlight that we've got here.
Yeah, so what we did was put together, and we think it's probably one of the most interesting slides of the whole presentation, is that when we looked at the types of categories, over 56% of the audits that we saw in the last financial year were for claim types where the taxpayer, the client of the accountant, did not get involved in the actual preparation on face value of the returns that were being reviewed or audited or investigated. Employer obligation, VAS, payroll tax, ATO excess super contributions, land tax and work cover. The majority of accountants do not prepare and lodge the majority of those returns for all their clients. A lot of clients do their own GST returns. Most clients do their own payroll, pay their own super, do their own payroll tax returns. Land tax, you don't even lodge a land tax return, you just get assessed land tax. And if quite often what we see in a lot of the land tax audits is the lawyer who did the conveyancing filled in the wrong form at the time of the property purchase, and that triggers a land tax investigation sometime down the track. Work cover. The accountant doesn't fill in every one of those annual rateable remuneration lodgement reconciliations every year. The client who does the payroll or the bookkeeper prepares. So over 50% of the claim types, we could argue, were for areas where the accountant, the first time they know there's a problem is when the audit activity starts. So it sort of debunks that argument back to us to say, oh, we're under the radar by the work that we do. That might be right on income tax, but you don't see income tax in that 56% of the claim types that I've just mentioned. And it sort of takes away that combative argument back as to why something like Audit Shield mightn't work for an accountant, when it probably does more so than ever, when 50% of the returns that could be audited you don't even see. So that's our point to make out of that.
And a trap for young players for people is many tax audit insurance policies out there have an exclusion in them that says that unless the accountant prepared the return and or signed off on the completion of that return, any audit on that return won't be covered under the tax audit insurance policies. Ours doesn't have that. Ours, as long as the accountant the client is client of the accountant, we don't have that restriction in place, but others, a vast majority of other policies out there do have it. So just if anybody is looking around, then please make sure that you tick that box and ask that question, because if you look at this stat, you'll find out it's too late to find out later on that you didn't ask that question. And we have people coming back to us with their tail between their legs just on this particular issue. So that's that. So, Rod, we've talked about the the areas that we've seen being audited. Let's sort of run through now sort of by the way we break up the clients, the client types. What sort of groups are being audited?
Yeah, so the way Audit works, for those that don't know, is that each client and client group get categorised based on their turnover into a category. So from individuals with partners and spouses through to all self-managed superannuation funds and business groups from zero turnover up to $100 million in turnover, which is the maximum that we can cover under the Audit Shield. So what we saw, and it's a bit of a random process, we're based on what clients are in that category that have Audit Shield and then what audits do they get. But the statistics for our over 3,000 accounting firms in 19 and 20 saw the top three business or most frequent business groups getting audits were 1 to 3 mil came in the highest, followed by 0 to 500,000, and then a bit of a jump through to 10 to 25 million. So that tends to move each year, but what we've seen as a trend over the years are those business groups, call it from 1 million to 25, tend to be a key audit category target group that we've seen. The other notable highlight that we saw this year, and I touched on self-managed super funds earlier, was that the value of claims doubled in 2019-20, so which again, whilst the percentage may have been low, the value was high within that category in terms of year-on-year movement. And what we see, we read, and we know is that the self-managed superannuation fund space in Australia is a key ATO audit focus. And you just look now at, it'll be interesting to see what happens with the early release of super. People have got two lots of 10,000 that they can take out of it. And immediately we saw, for want of a better word, scams being created, take it out, recontribute it back in. People were being inventive against the whole spirit of what it was all set up to do. The ATO said, we'll be cracking down on that like a ton of bricks if we suspect that's what's going on. So it's a key. There's so much money tied up in self-managed superannuation funds that the ATO have to have a clear focus on it to make sure that it's being managed correctly. We saw a big focus on investment strategy. So every self-managed super fund has to have an investment strategy. So the ATO put out a bit of a broadcast and to every super fund say, hey, make sure you've got your investment strategy in order going forward. It could be an area that we're going to look at. So what happened? Everyone scrambled to check did they have their investment strategy done correctly, and I'm tipping those that didn't have redone it again. So probably don't have to do the audits too much, but I'm sure they'll pick some and many as part of their audit focus. But again, I don't think a day goes by where through all the various publications that are out there that there isn't an article on self-managed super funds in all the accounting press every day.
And just the highlight for me in those some categories there that we talk about in those turnover ranges, the 10 to 25 was a big mover and shaker from last year to this year, because it's when I was going through the numbers, that wasn't even the top 5 in the list back last year. So it's come up, and if you think, and that's on raw numbers. So if you think about how many businesses we would have in that mix between from 0 to 500,000 turnover, 1 to 3. There'd be less proportional in that 10 million to 25 million turnover category, and yet they, by raw number, have pushed up to number 3. So it'd be fair to say that the ATO has had, certainly last year at least, but it's going to continue, a big focus inside that space of that 10 to 25 million turnover range. So, given the kudos that you're claiming in this office for being 2 years ago to be able to pick out the fact that employer obligations were going to be the biggest audit activity, and you did that well before it happened. What do you see? What do you see as the trends are going to look like in the 2021 year? Nostra Audits.
Nostra Audits. Well, if you had asked me this question 4 months ago, the first little picture there of the top three wouldn't have even existed. So with a rocket is JobKeeper payment audits with the biggest rocket ever seen in the history of the Australian tax landscape. I predict on its own could rocket to number one in 2021. I think as things start to settle down, hopefully to the new normal, single touch payroll will again play a vital role, as it will in JobKeeper audits as well. And I would expect employer obligation audits to again be a headline act in the current financial year. And the third one, well, it's a bit of a sleeper now, but in February I would have had a rocket up superannuation guarantee combined with the SG Amnesty. But we'll talk about the Amnesty a bit more in a minute. But again, super guarantee is going to be a big focus, I think, as for the next year.
And all of those, just looking at them, we're all still payroll related.
They are still all payroll related.
So that's where we're at.
Yeah, I think there might be a slight hiatus in payroll tax audits due to COVID, but every state government's going to be in a deficit due to COVID, and they might have given away a lot of concessions in payroll tax, but I think they might come back harder than ever in audit activity, trying to reboost the coffers. I'll say in 6 months' time. It might be a little bit longer, but they're not going to just let it slide forever. So they'll be back bigger and better than ever in the not too distant future.
Yep. Time for our next poll, ladies and gentlemen. Just to make sure you're not asleep and you're still listening to it. So just the poll question is, have you had any queries from the ATO on JobKeeper? So obviously this is directed at our public practitioner attendees listening in, and or if we've got any people in business that are listening as well. So have you had any queries from the ATO on JobKeeper? Okay, so let's get a little bit more involved in JobKeeper a little bit here, Rod. So let's just focus on it for a little section.
Well, I think that everyone who's attending this webinar will know that COVID-19 has challenged nearly every aspect of our life, both personally and business, in the last 4 to 5 months, and that's stating the bleeding obvious. But and as a result, we're now living in a JobKeeper world. So there's I mean, the predictions were wildly overstated by the government when it was first announced as to how much it was going to cost the government, but they were scaled back to still a rather very, very, very large figure. But rather timely, as we're putting the slides, finishing touches on the slides last week, out came the government with the next round of JobKeeper version 2.0, somebody called it, and that seems to have stuck a tag, and it's now being widely called that. So we're now seeing it getting extended out to March 2021, but the difference between JobKeeper 1 and JobKeeper 2 is that JobKeeper 1 was just based on, oh yeah, I reckon I'm going to have a 30% drop in revenue without too much full-blown proof at the time. But those that wish to continue past September for further quarters will need to be proving based on actual, not projections, the drop in turnover to remain or even enter into the program in JobKeeper 2. So the amount that going to be paid through the ATO is going to drop on a sliding scale across the next the December and then March quarters. So the difference will be that, to me, that means that the audit focus will increase a lot on the actual turnover, drop in turnover, actual versus projected will come into play, I think, a lot more once the next phase kicks in early 2021. Okay. Look, the ATO said they'd be sympathetic at the outset. I think they probably will be in penalties and things like that if people got it wrong, because you sort of had your finger up in the air going, oh, yep, my cafe's shut, I think I'm going to drop 30%, but lo and behold, I've sold 10 million takeaway coffees and my turnover actually has gone up after the first month or whatever. So pubs and clubs and that probably are going to struggle. certainly in Victoria, but you know, everyone's got a different story, and that's how that pans out will be decisive as we go forward.
Just a quick note here, that, and this is a general statement on tax audit insurance policies, again, like I was doing before, that to say that often the concept of grants and the concept of subsidies, any benefit or entitlement you've got from the government coming the other way generally aren't covered by a tax audit insurance policy, because it's all about the revenue aspect of it. Have you paid enough revenue? Have you paid enough taxes? Generally, where these tax audit insurance policies cover. So we got to the point in time with you know, obviously this serious economic circumstance we find ourselves in, and so we thought with everything that's happening, something we need to do and try to find a way to sort of help out as well. So with in conjunction with Bureau, the support that we got from Bureau, we then worked on creating an endorsement inside our policy to cover for JobKeeper claims to allow it inside the policy. So, and just quickly, that's an endorsement that doesn't cost any extra for the policy. It's immediate, and also it extends to existing cover holders. So if you've got an existing Audit Shield policy, that endorsement for the JobKeeper audits goes back and covers you from into last year's policy as well. So just it's there to protect, it's there to support the industry, which I think needs to be done on such a because JobKeeper is such a big deal on a big scale. So back on the JobKeeper. So what do you see coming up in regards to JobKeeper reviews and audits?
Yeah, so I mean, we're starting to run out of time, Raymond, so we might have to quickly push on with some of these.
Well,
but just letting you know. But so the first round of JobKeeper payments started in the first week of May. So we've now had May, June, July, so most employers will have received 3 or 4 JobKeeper payments by now if they're in it from the start. So we've started to see the audit activity coming through, and what we've noticed is in many circumstances it could be a mismatch in data. Employees had nominated 2 employers, the incorrect nomination forms. They want proof of the wages being paid to the employees and things like that. Evidence of existence of employees, evidence of the nomination form, proof of wage payments. What test did the employer use to enter into the JobKeeper system in the first round? The basic test, the alternative test to satisfy the fall in turnover. Here's a questionnaire to fill in. We want to know a bit more about your business. Was that just JobKeeper related, or are we fishing around and digging around to see what this business might really be up to outside of JobKeeper? When did these employees start exactly? Are they brand new employees? They've been here. Oh, our data says this employee terminated like 6 months ago. Why are you claiming JobKeeper for them? They've popped up somewhere else now, so to speak. So the ATO is using the data from Single Touch Payroll and other sources that they have access to start their audit campaign on JobKeeper. And we're now seeing claims coming through and getting lodged with us. Once the application process goes through, our policy endorsement only covers audits once the JobKeeper payments have started being paid by the ATO, not, oh, you've missed box 3.2 on the application form. That's not an audit. So it's about the actual audit once the payments have flowed. So that's now starting to take off and become bigger and bigger as we work our way through it.
So what else? That's JobKeeper. We've seen some other inquiries inbound with regard to some of the other COVID supports that existed.
Yeah. So the 2 big ticket items. So well, there's probably 3 things. There's been state-based grants. That, as Roman mentioned before, government grants and subsidies and all like that aren't covered on pretty much any policy. So we haven't, because they aren't covered, we haven't been getting many inquiries on those. But the biggest by far outside of JobKeeper, and there's probably been more activity in this space in the initial phase, was in the government's cash flow boost stimulus package that they put together, where pretty much every employer that is employing staff in Australia received entitlement to the cash flow boost. So the March 20 activity statement was the trigger for the cash flow boost first payment, and there'd be subsequent rounds with the June and September activity statements once they get lodged. So we saw a large amount of reviews and audits of the cash flow boost coming through for those March activity statement lodgements. So we only cover where there's an audit or review of the activity itself, not just a simple eligibility check on the cash flow boost for the government stimulus. So what we saw is a lot more detailed audit activity on the GST, the W1 and the W2 in the activity statement. So they're a full-blown audit or review of the activity statement, where the ATO is holding back the cash flow boost payment until they're satisfied that the employer can validate and verify, justify what's been disclosed in the lodged activity statement.
Okay, so we're going across to sort of along with SuperStream, single touch payroll has been the big game changer when it comes to the ATO's battle with compliance, as we've already discussed. Just quickly touch on the single touch payroll.
Yeah, I mean, we've talked about it a few times. So what we saw, by the end of 30 June 20, we had 2 years of single touch payroll existing, 1 year for all the employers that had over 20 employees, plus anyone who voluntarily went into it early. And then in the June 20 year, pretty much every employer was into the system, other than a couple of exemptions and delays that I mentioned with under 20. So the vast majority of the employers in Australia, starter and employers, are now being captured by single touch payroll, together with SuperStream and your ATO Superannuation clearinghouse, which links to SuperStream. You know, the ATO has now got that data to detect all ESG inconsistencies that are out there, and the easiest one to pick up on is late payments of super guarantee. So the ATO, they do take a pretty hard line approach to late payment of super guarantee. Even though the employer might have paid the super, they paid it late, they're not compliant with the SG laws, and the ATO will review or audit them because at the end of the day, the employee missed out on earning interest in their super fund because the employer was late in paying the super. So now they just know every single one of them. So it's a key driver. And they go, oh, that employer paid the first 3 quarters, but they haven't paid the last quarter, which is due this week, tomorrow. So anyone who hasn't paid their June 20 super by the 28th of July, the ATO is going to know who they are by Wednesday. So by Thursday, they can start their audit activity.
I'll probably wait a month later to see the super guarantee shortfall forms start coming in, so there'll be a month after. But we have seen them pretty quick, haven't we? It was weeks difference from where somebody didn't make a super payment, and then it was like weeks, because 6 weeks later there was a letter come through to that employer to say, hang on a minute, Flash, we're having a look at you because there's something not quite right here. So
I also think it's a fair generalisation statement to say that most employers that don't pay their super on time or pay it late don't then trot off in a month's time and fill in SGC statements and go through the whole process again. They just don't do it, and that's what the ATO picks up on every single time. So
that's right. The system is there for it, but the reality is the practice doesn't support the system. The people, they miss their super, they're going to miss filling in the shortfall forms. That's the nature of human behaviour. Okay, so if we look at here, there's been big focus in employer obligation. We've talked about it a lot in here. But there's been something running in the background here that it's been lost at the moment with the effects of COVID, and that's the superannuation amnesty, the super guarantee amnesty that's been. Where do you see that at the moment?
Yeah, it was interesting because it took the best part of 2 years to actually become legislated and get off the ground through the political toing and froing that went on in the first round. But in February, it finally got ticked off by both houses of Parliament and became law with an end date of 7th of September 2020. Well, when it got passed, COVID-19 didn't even exist in Australia, and with everything else that has happened with business in Australia, going back to JobKeeper, cash flow boost, everything, etc., whilst the SG Amnesty is running in the background, I have not heard any information being put out yet on how much the SG Amnesty has collected since February, because I think it's become a lame duck, because the employers that were probably anticipating using it have been affected by COVID and may well be on JobKeeper and don't have the money to pay the super from 2, 3, 4 years ago that the Amnesty was going to collect. So the last time a figure was bandied around was 30 June 18 stats that said there was $3 billion in unpaid super. That's 2 years ago. My guess it'd be 5 billion plus by now. And I think it's also fair to say that there's going to be a lot more unpaid super in the potential March and June quarters due to COVID. Those quarters aren't in the Amnesty, but employers are probably going to focus on catching up on those quarters before they caught up on what they were going to catch up on the Amnesty. So unfortunately, it can't just get extended automatically. It has to be passed through both houses of Parliament, because it's all based on royal assent, and Parliament doesn't sit again until sometime in August. So whilst both the CPA and the Institute and all the bodies have put out a, hey, this isn't fair, this isn't going to work, we need an extension. At the moment, there is no extension of the Amnesty as we sit here today. So will there be? Who knows? I'd like to think there would be when things settle down, but I don't know.
So it's probably, arguably, it's a good idea to have it done, given all that focus we talked about and all the social responsibility inside getting wages, right? So it was a good initiative, I think, but unfortunately it's fallen on bad timing, hasn't it?
Absolutely.
So who knows what's going to happen there? We can all watch this space. Okay, well, that brings us to the question time on our part of our presentation. So for those of you who are still tuned in, that have survived this long, thank you very much for your attention and attendance through this. And so we'll just sort of wait for a couple of questions if they can come through. So there's one there we might deal with after which is outside of the scope of the seminar that or webinar. So we might to address that one separately for Ravi Kuman. So, just give us a chance to see if there's anybody else there. So Eleanor.
So I thought that in anticipation of a couple of questions and noting the time, I heard you were saying the stats around accountants are not necessarily the ones that are lodging the returns that are audited and that you end up having claims for. What's your advice to public practitioners in terms of having those conversations with their clients and getting ahead of the game so that these events don't actually happen? Is there a role for them, or do you think it just has to play out?
I think there's always been a role for the accountants, and if I go back to my day, it was that training aspect. Are their systems right? If they want to file and lodge their VASs on their own, are they capable enough to do it? Have they got enough information? Are they competent enough to be able to draw the information, to fill in the boxes, to do that? And if they weren't, then it's a matter of training, potentially doing some training with them to try and get them to that stage if they insist on wanting to do it themselves, or help them set up their MyObs or their Zeros or their QuickBooks to be able to make that easy, give them a guide sheet to sort of say, run this report, you take this figure, put it over here, and that sort of, to try and support them. But in the end, people are going to make their choices, and so you can only guide them to a certain point in time. You can do your rec at the end of the year, which we all do when we do our end of year financials. We'll go back and reconcile back to their GST accounts to sort of see how those control accounts are looking, to see if there's anything not quite right there. So you've got that to have a look back, but it's supporting them. It's coming up with ways to try and support them.
Because also a lot of accounts are under fee pressure, so there's only so much time allocated to get this fee. And if the clients say, look, we're looking to save costs, we'll do it ourselves, then that also comes into play. So you've got to balance all that up.
Thank you so much. And in the comments box, we've got an attendee saying, thank you for a very enlightening webinar. And I would agree. It was great. I love data. I love stats. And it was really interesting to see how the information you presented aligned with what the ATO messaging has been over the past few years. I think it's great that you've got JobKeeper covered, because you're absolutely right. The ATO is signalling a lot of compliance work in that space. And it was interesting to see how they've used cash flow boost claims to actually look at the broader withholding obligations of some of the claimants. So with that, I'd like to draw this webinar to a close. Thank you, Rod and Roman, for your session. And I will now hand back to Melissa.
Okay, thank you. You're welcome.
Thank you, everyone.
Thanks everyone for your participation today. In the next 3 working days, you will receive an evaluation survey accompanied by the recording of this webinar. We really appreciate your feedback, as it is extremely valuable to help us deliver better events for you. Thanks again, and we look forward to welcoming you to another CPA Australia webinar soon.
Thank you.
Thank you.